We have heard from a lot of major retailers in the last week, most of them issuing some weak guidance or even they're withdrawing guidance or just trying to add some color around how they are navigating this macroeconomic uncertainty. And that is the common theme, and tariffs. Joining me now, we've got Simeon Siegel, BMO Capital Markets Managing Director here. Simeon, always a great pleasure to grab some time with you here. The consumer discretionary sector we know has been essentially flat in terms of revenue growth, showing no change since March 31st. It's at about 2.8% according to FactSet. I want to get your read in on this quarter so far.
Good to see you. By the way, how great was that? That is the common theme, ... and tariffs. Like that and tariffs is just, we're never going to get away from that. Things were looking good, and then we wake up today and all of a sudden we're back to another conversation. So I think that is a very big part. I think that it's funny, not since COVID did I care so much when, or rather not did I care, when a company reported mattered so much. When the world shut down, whether you ended in 1 month or another, told the world about your performance, same thing right now. If you reported before the, let's call it easing of Liberation Day tariffs, you withdrew your guidance, it was all filled with uncertainty and things were tough. If you reported in the 2 weeks after that, everything was better because you just felt like, you know what, it feels like we're pulling back, we can run a business. If you report after today, we're going to go back to that. I was looking at about a quarter of my coverage withdrew guidance. That's not a thing you normally see. And so I think this idea of we want to look at companies, we want to think about the businesses, but the and tariffs becomes a little bit all encompassing.
Simeon, so interesting because in the onset of the tariff talks policy and what was going to be rolled out and what got pulled back, all of us were concerned about, okay, well, for the retail sector, it seems like China is the big focus. And I mean, for me at least, I was like, all right, I don't really shop on Shein, I don't really shop on Temu, so I'm not really that concerned. But now we're talking about Zara, now we're talking about Mango maybe getting thrown into the mix here if some of these new tariffs go through. So overall, what do these new EU tariffs potentially mean for the retail segment and sector more broadly?
About you and I, you may not shop at Shein or Temu, but you shop at Nike, right? So in this idea of it went from China to Southeast Asia to now the EU. And so there's nothing that you and I wear that doesn't touch one of these areas. And so the question is, what is that? How far do we take this? And so that was the biggest deal with Liberation Day, to your point. It was people had prepped against China. A lot of the companies had moved out of China, but they moved into Southeast Asia. And so that became really under the gun, and that became the focus. You're right. I mean, EU from an apparel side, from the vast majority of my world side, there's a reason all of the stocks that I look at on, let's call it the discretionary apparel type of landscape right now are down, but they have not collapsed. There's few, the European focus right now is a little bit less intensive for apparel because they're so heavily weighted to Southeast Asia. But I think what it shows you is you're not out of the clear. And so I think waking up to these surprise announcements, maybe they shouldn't be such a surprise, but waking up to that, I think, is what gets companies to just say, listen, I'm trying to run the business. If you're going to give me more costs, tell me what those costs are so I know how to move on. It's the uncertainty that I think keeps paralyzing decision making. And that is what was so challenging. That's the idea. Withdrawing guidance doesn't mean you don't have some view. It means you have a lot of different scenarios and none of them are really under your control. That's a lot worse. Withdrawing guidance is very different than lowering guidance. We see lowering guidance all the time. But if you and I want to actually have a thoughtful conversation and the businesses want to have a thoughtful ability to predict their business, they need to know what cost they're accounting for in the first place.
Certainly. So Simeon, if we were to give viewers a little bit of a report card just to really assess how retailers, manufacturers as well are doing over the course of the uncertainty and what we've heard from earnings here, let's start with the best of the best, if you will. Who's getting an A grade based on how they're passing the test?
So listen, I think what's really important is you put up that, I think it was a 2.6 number that I think you grabbed from FactSet. We're still growing. Like on average, if I look at my group, this past quarter, revenues were still up nicely, gross margin was still up nicely. It's the future that people are worried about. Mm-hmm. And so setting the stocks aside, you and I are still seeing a Birkenstock or an Amer Sports, which again, smaller businesses than the largest, grow mid to high teens percentage. There are still companies that are taking share, strong brand equity, and are doing a great job, right? Then last night we have Ross Stores, which is an excellent business, right? Generally speaking, you and I talk very positively about off-price taking share, but they withdrew their guidance, even though they said the business is looking okay. And so that's why I think right now, as you think about that report card, Size will matter, but it's all about brand equity. In a world where you and I are worried about tariffs, the strongest ability to mitigate is having a strong brand that can raise price. And so the A, I would say, let's go with Birkenstock.
Okay, A grade for Birkenstock. Who needs for this entire thing to be graded on a curve then? Who's kind of the middle of the pack?
So I think right now you watch the TJX, which is an excellent business, right? Still will have long-term compounding. But right now, this uncertainty, you're worried about potential demand. And so I think from them, I would give, I don't know, I'll go B. Let's go B plus A minus type of a number for TJ. This is, by the way, this wasn't prepped. I'm thinking like, how do I go through being, I've never been a teacher before. I feel like I need to grab a red pen.
I keep a red Sharpie here, but those are even a little aggressive because it's way too thick as you're starting to write through and it bleeds through the paper. That's just, way too demonic in some cases.
You know what? In the spirit of curves, I'm going to throw Bath and Body Works in there. They just announced a new CEO, but they just put up as part of that, they announced they basically gave a pre for the quarter. We'll get the actual results next week. Mm-hmm. And they showed growth for the first time. And so that's from the current regime, right? So they're changing. We'll have new management, but the path of the old management obviously is now shining forth, and we're getting the first growth in a very long time. Looks like we grew 3%. And so you and I have talked about this one in the past, wondering when have people bought enough candles from COVID? It feels like they're there. And so I think on the spirit of B and B plus are supposed to be who are we looking forward to in an optimistic way, I would put Bath and Body Works on the scaling the curve and about to tip over in a good way.
Okay, and so
then whatever letters we're going with.
Okay, and so just lastly here, I don't want to say failing grade, but I will say most room for improvement. Who of the companies in your coverage universe is that right now?
I'd be such a bad teacher because I'm all about giving A's and B's.
That's the teacher that all the students want to have.
That's the award I want. I want most favored teacher that gives favored results. No, listen, I think that you and I can see, especially today, I mentioned Ross Stores, the stock is down. Deckers, I don't cover, the stock is down. Like you can see from a where have expectations not lined up, there have been definitely stocks that have seen some pressure. I think part of that, though, again, the question you and I are going to have to ask as we look forward is how much of that is company specific versus how much of that is a function of there's just a lot of uncertainty and they're setting the bar. I think an interesting one, again, in the spirit of giving a tougher grade, but a potentially positive outcome from it, American Eagle, which is not one that you and I normally talk about, came out and talked about a write-down. A write-down is very different than a markdown. A write-down is very different than macro. A write-down means they made an investment bet on their product that didn't work. And they're taking their medicine and they're saying this product is not selling at the price we thought it would. It will not sell at the price we thought it would. So we're going to take our medicine now, mark it down, write it down. We'll discount it later. That means, right, by definition, they would have to take we're going to C, D, whatever letter you want to give. But the interesting thing is, if you've taken your medicine, if you've already written down that product, anything you sell it at comes in as gravy. And so it'll be one to watch if they've now sufficiently taken their medicine and have that negative whatever grade that we're giving them next semester, perhaps they're setting themselves up to start clean and rebuild.
Simeon, I know you could do deep dive on these companies all day. We got to leave the conversation there. Appreciate the time as always.
Great to see you. Happy long weekend.
Same to you.